In this video, guys, we're going to talk about GNUS Brands. We got a lot of new news, including a new acquisition from GNUS Brands, and also the company released its 10Q, that's its third quarter 2020 earnings report. So we have a lot to talk about in this video. So before I get started, guys, just smash the like button. It really helps. So let's get into it. So out of all the stocks that I've been talking about lately, we've seen a lot of developments from EV stocks, renewable energy stocks, and those seem to be the hot trend. But right now, it seems like, me personally, my portfolio, GNUS Brands is one of my laggards. And this is probably one of the most frustrating stocks I've ever owned, simply because I have such high expectations for this company. As you guys probably know, the company is affiliated with Warren Buffett, Arnold Schwarzenegger, and even Shaquille O'Neal. So lots of high profile celebrities and just generally super famous people are involved with and collaborating with this company, but the stock just seems to not really take off. So we're going to talk a little bit more about that, and we're going to talk about some of the latest updates in the company. So first off, let's get to the kind of the news updates, and then let's talk bit more about the company. So what's really going on right now is GNUS Brands made a brand new acquisition, and so let's get into that news release. Okay, so here we are. So it talks about GNUS Brands International announces strategic acquisition of ChizComm Limited and ChizComm Beacon Media. So, a lot of people are expecting a merger. Usually there's a thing going around the market known as Merger Mondays, because a lot of these deals end up closing on the weekends and companies release the information on Monday. So the latest news is that GNUS Brands has acquired basically a children's and toy market marketing and media agency called ChizComm Limited, and then they purchased also ChizComm Beacon Media, which is like a media buying division. So according to the press release, it says ChizComm is the largest purchaser of children's media across traditional and digital platforms in North America. Founded by Harold and Jennifer Chiswick in 2013, they have offices in New Jersey, LA, and Toronto, and they represent some of the some 30 major toy companies, some of the most powerful and iconic brands in children's media and in the toy industry. So why is this important? Well, I think a lot of people are kind of looking at this acquisition as like, you're probably hoping that they were doing something involved with Netflix or Disney. Probably Disney would be the most desirable partner, simply because Disney just announced earlier that they're going all in on streaming, and GNUS Brands is definitely a streaming company. But I'm going to tell you guys something very interesting that I realized about this acquisition. Companies like Disney grew through acquisition. So Disney ended up picking up big brands like Star Wars and Marvel. They didn't originally start out with these brands. These brands were acquired over time. And, Disney is a massive, massive company. I believe the stock currently has a market cap of like $250 billion. So definitely I understand the goal of growing with acquisitions. That's going to be the easiest way, probably the most profitable way to grow. Instead of having to create all the content yourselves and having to organize these companies, better to just kind of build them together. And that's exactly what Warren Buffett did. He basically Berkshire Hathaway, when it started, was like a really underperforming textile company. And, Warren Buffett became famous by basically taking Berkshire Hathaway and just acquiring other companies and turning it into the conglomerate it is today. So what's interesting about ChizComm is according to this press release, it says the company's unique purchasing power and extensive media relationships across networks including Viacom, Warner Media, Disney, YouTube, offer clients an unmatched competitive advantage and access to all audiences. So here's my rationale for this acquisition. GNUS Brands is trying to make money through the cartoon channel. They're trying to partner with brands. And, looking at the latest quarterly release, I'm going to dig into that a little bit more just at the towards further along in the video, but the company is kind of struggling to generate revenue with the cartoon channel. The numbers were really underwhelming. So I think this acquisition is to try to get more money to the channel. If they can get these partnerships through these brands, and they can simply say, hey, I've got the cartoon channel, I've got this app, it's on Roku, it's on Apple TV, it's on Samsung TVs, and get some of these advertisers to advertise their brands on the cartoon channel app. And that seems to be working really well. So if we head over to the latest CEO newsletter, this is written by Andy Hayward. He's the CEO of the company. As you can see, he talks a bit more about the acquisition, but what really caught my attention was some of the new advertisers that are on the cartoon channel. So as we can see here, if we go down here, it talks a little bit about the content, and we understand that. But it says here, the cartoon channel lives off advertising, not subscription fees. We're excited that if you go to the channel, you'll see we've now brought in prominent kids advertisers, including McDonald's, Lego, Playmobil, and Wells Fargo. So it says, because we live off advertising, not subscription fees, that again, this is where synergies with ChizComm Media become so extremely powerful for Genius Brands. And then it talks a little bit more about some of the animated series. So right now they're sitting at around 4 animated series. So obviously this isn't really the news I was expecting. I was hopefully expecting you know, probably a partnership with hopefully Disney or something like that. But I think this is the positive sign. Obviously long term they're getting access to those advertisers, and since now they own the largest media buying children's company in North America. So that's definitely a valuable asset. So let's talk a little bit more about how much they ended up paying for this company, because everyone's saying that, oh, you know, this was a waste of money and stuff. So let's actually dig into those numbers. So to dig into those numbers, we're going to actually go over to the 10Q. So it's really easy to access this information, guys. The 10Q, like I mentioned earlier, it's just a quarterly form. You have to file with the SEC every 3 months if you're a publicly traded company on like the NASDAQ or something like that. So as we see here, we can take a look at the numbers. So first off, let's talk about that acquisition, and then let's go over the quarterly numbers since we're already talking about the ChizComm acquisition. So it's easy to find these numbers. I blow this up a little bit. It's too big. Okay, sorry about that. So anyway, so here we are. I just go down to the acquisition numbers, and they have all of this information here in the quarterly report. So it says here on November 15th, the company entered a binding letter of intent with ChizComm. So they are acquiring 100% of the company for $8.5 million in cash and around $3.5 million in shares. So in unregistered common stock. So the total value of this deal, it looks like it's about, I would say, what is that? About $11.5 million, around $12 million. Okay, $12 million. A total of $12 million for the deal. So they paid $12 million for this company. Apparently the company has like $100 million in ad spend every year. So, you know, obviously, hopefully they think the company is worth more than they're paying for it. But I think they're desperate for advertisers. And why are they desperate for advertisers? Well, that's because the quarterly numbers are, I think, were a huge disappointment. So I was expecting a lot more revenue from Genius Brands, and that just wasn't the case. You know, I think the quarterly numbers were downright, you know, very bad. So if we take a look at the quarterly revenue, so if we just scroll up here, you can find it right here. So here we are, the latest quarterly revenue numbers. This is what I've been waiting for a long time. So as you can see here, over the last, on the Q3, the company generated just $42,000 in advertising sales. So that was a big disappointment, I think. You know, year over year, revenue is way down, and losses are kind of piling up. So if we take a look here at the balance sheet, we can see that the company's already accumulated a deficit of negative $458 million, and most of that was just simply issuing shares and things like that, and raising capital. But you know, there's not a lot of revenue coming in as compared to last year. Now, the good news about that is that the CEO said that this was a tough year just because of the whole pandemic situation, and things will improve. But if we scroll down here, we can actually get a good breakdown of how the revenue was generated. So let's see here. If we just go here, we can get some of these numbers. So here we are. So this is actually on, if you guys are going to the quarterly report yourself, what page? This is on page like 38. So as you can see here, we have a breakdown of the revenue. The company only generated $273,000. That was a huge letdown. So they didn't end up getting a lot of the entertainment and the distribution revenue that they got from Llama Llama through Netflix. So that revenue was down. Advertising revenue was down. Basically, the only thing that's improved is licensing revenue and product sales. So even product sales were, obviously car sales are going to do much better during the Christmas season, but overall, I think this was a pretty bad quarter. So now that we've gone through everything with all the events that have taken place and the earnings and everything, I'm going to give you guys a technical analysis of Genius. Okay, the good news is that amidst all of the really bad, I think, earnings report, which was terrible, the acquisition is probably definitely a positive long term. I still think that there's a ton of support for the stock. So, we're really looking at heavy support at around $1. That's just above the NASDAQ minimum listing requirement. So, man, it's really been frustrating with this company. I really thought things would turn a lot faster, but it just looks like next year is going to be the day. So for me, I would say the earnings report is a negative, but the acquisition is a positive. Getting access to advertisers is so important, especially for a company that relies on advertising revenue like Genius Brands. So I would say we're still sitting at a lot of accumulation phase. There's a lot of potential for this company, but don't expect the stock to jump like you would see something like NIO or Tesla. It's just not that type of party. This isn't a company that's like selling cars or some new technology. It's a streaming platform for kids, and the company's going to grow, but it's not going to grow nearly as fast as some other stocks you're seeing. So to kind of wrap things up for this video, I would say Genius Brands is probably a stock you want to buy, just forget about for a year or two. It's not going to grow that fast, and it's pretty frustrating to trade this company. But, like I said, I still haven't sold a share myself. I believe in streaming stocks. I really believe that cable is out and streaming's in. Me personally, I haven't used cable in months. Streaming for me 100%. So that's one of the reasons I own this stock. I believe that children's content has a big future. Kids are they're on their iPad, they're on the phone, they're watching things on TV, and advertisers like McDonald's and Wells Fargo, they know the power of advertising to young kids. It's best to get people indoctrinated. That's probably not the best word choice, but it's best to get people interested in your products as young and build that brand recognition. So you want to build a lifetime relationship with someone. You don't want to just get them when they're, a teenager or whatever. So I think there's some potential here. I'm going to call this stock a hold. If you haven't bought now's probably a good time to buy, because I'm pretty sure a lot of people are going to be scared away from that earnings report. But I do like the acquisition. I think it's an interesting one, and it makes sense that they would buy a company that already has relationships with the advertisers that they're interested in. So, the CEO said 2021 is the big year. We're going to see a lot more money coming in for the cartoon channel. But right now, guys, I would say this is a hold for me. I'm not going to sell any shares. I own about 1,300 shares of Genius Brands. I'll probably add a bit more and build up my position to about 2,000 shares, but I'm not really trying to make money on this thing right now. I'll probably just hold on to it, see how this runs. For me, I'm going to be looking at those electric car stocks. That's where I'm going to be focusing the bulk of my money to try to make some quick gains on my portfolio. So that's it, guys. I hope you enjoyed this video. Kind of a bummer for Genius Brands, but the good thing is the Christmas season is coming up, and that is the most profitable season for toy companies and children's companies. So hopefully next quarter is much better. So that's it for now, guys. I hope you enjoyed this video. If you enjoy my content, please smash the red subscribe button. It really helps out the channel, and we're almost pushing 10,000 subscribers. So thank you guys so much for tuning in. For some of you guys, it's been quite a journey. So I'm on the road to 10,000. So thanks.